Well, it's tax time again, and we thought we'd provide you with an update on some of the recent changes and also revisit the requirements for several key tax deductions. For many of these items, we've already had questions this year from our clients who sent their tax information in. The majority of us experienced some form of working from home during the 2020 financial year due to the COVID-19 restrictions. You may have been aware that there is a flat rate, 80 cents per hour, that you can claim from 1 March 2020 until 30 June 2020. And this seems attractive compared with the previously available 52 cents per hour method. Provided you've kept good records, the 52 cent flat rate plus actual other claims may give rise to a bigger deduction than a straight 80 cent per hour flat rate claim, so keep that in mind. Your ability to earn an income is one of your most important assets, and you should be aware that premiums paid for income protection insurance policies are likely deductible to you. So not only can it be an important risk reduction strategy, but you can claim the premiums against the income you're insuring. We get a lot of questions about self-education expenses, and there are a lot of myths. The key requirement to consider here is the connection between the course or module studied and the income you earn in that tax year. You can't claim the cost of education that relates to a future role. This is particularly important as you undertake postgraduate qualifications while moving through your training rotations. Investment properties are another hotspot from the ATO. Remember to keep track of all income received and any expenses you pay, such as council rates, insurances, agents' fees. The two deductions often overlooked are the interest charged on your loan account and possible depreciation. It's important to speak to an accountant about these because there's very specific rules about both. You also need to keep very good records about the periods you move in and out of the property, particularly if you move away for rotations, as there could be capital gains tax implications. With motor vehicles, you can claim the cost of using your motor vehicle for work purposes. And there are two methods: the cents per kilometre with a limit of 5,000 kilometres per year, and the logbook method, where you can claim a portion of actual car expenses. Now, this is limited to you driving between places of work or work and study. It doesn't include travelling between home and work each day. Also, just a reminder that you can claim the cost of memberships for professional associations such as the AMA, also subscriptions to journals and medical indemnity premiums. Remember these key points in order to claim a tax deduction. You must have spent the money yourself. It must relate to you earning your income. You must have a record of the expense and be able to show that. You can only claim the work-related component, not the private portion. And this is particularly important for going away for conferences and the like. As always, please don't hesitate to give one of our WealthStart team a call if you have any questions.